Welcome to Peerpoint Perspectives, the Securities Finance podcast delivering commentary from the best, brightest and most innovative people in the world of securities lending, repo, collateral management and related areas. Peerpoint Perspectives is brought to you by the consulting team at Peerpoint Financial. So now, over to your hosts.
Hello and welcome to Season 2, Episode 7 of Peerpoint Perspectives, the Art of Securities Finance. I'm your host, Roy Zimmerhansl, and practice lead at Peerpoint. This year has seen my partners and I continue to create free securities lending content and make it widely available. We've done more than 60 blog posts over the past year and a bit, and this is podcast number 22 since the start of June. We've also started doing live events each Wednesday at 10 a.m. UK time. Those are currently available live, and we encourage people to join us live if they can, because you get a chance to ask questions, make comments, and really participate in the discussion. Or, of course, they're available also for replay on LinkedIn, YouTube, and Facebook if you can't join us live. And 10 a.m. is not always the most convenient time for everyone. So, I get that. I'm telling you this because what we're going to do this week on the podcast is a look back on a series of blog posts written by my colleague Jeroen Bakker on some big securities lending trades of the past and several trades that have been current this year. As I said, my guest is Jeroen Bakker, who's the Peerpoint consulting lead for the Benelux region. He has broad experience over 20 years as a borrower and lender and in multiple roles, including significant time as a trader. So from my perspective, he's perfectly positioned to be running this trading blog series. So now let's get to it. So good morning, Jeroen. Before we look at any of the specific stocks that you've looked at or trades, I want to ask, why did you start writing the blog series on various trades, past and present?
Well, good morning, Roy, and thanks for having me on the great podcast. Actually, it is a bit of a next step to what we did previously. So, I joined Peerpoint at the beginning of this year, and one of the questions is, can you write blogs? So, well, I'm not sure I can, but I'll give it a try. And immediately I started writing things that are close to me, that I know most of, and that was the series about securities lending transactions. So what kind of transactions are going on in the market, long shorts, equity derivatives, convertible arbitrage, all those transactions, and those were actually it was a series of 5 blogs that we did. And yeah, of course, that's not infinite what you can write about how much going on in securities lending on that side. So came up with the idea, let's take out specific examples of transactions that were out there, or maybe are still going on in the market, and let's write about that. And luckily, we had FIS help us with their Aztec analytics. So David gave us some heads up and help on the actual data on the back of the securities lending transaction. So that makes it a lot easier to analyze what is going on or what went on in particular.
Yeah, big shout out to David Lewis and FIS Aztec Analytics for that, as you say. And I guess you looked at both historical trades and current pending trades. Again, how did you come up with the ideas of which stocks to have a look at?
Well, the first one that we did is it was a no-brainer. There was so much going on. It was Wirecard. At the time that we had that thought about writing about specific transactions, Wirecard was all over the news. It wasn't quite sure whether or not it was a fraud or not, and what the short interest was. So I started writing about Wirecard immediately, and that one went. I posted that one, got a good comments on those, and then I was thinking actually back to where, well, in my trading days, what were deals that were going on that really I won't say shook the market, but actually did quite stir up the market. And there were two names that I wrote about from a actually three names that I wrote about from a retrospective point. And then we start turning it around and start looking forward, because again there were so many names going on in the industry that were hot and that were people were talking about, that were in the news. So the short answer to the question is actually what's going on in the news. We'll look at the data and we'll see if there's a story or not.
It's interesting. I had someone raise the point to me last week, I think, or the week before, where they actually said, the thing is, it seems that there's a lot more short selling activity going on. And with my blog post this week, where I looked at a post called The Death of Short Selling, which, by the way, I don't think it's a death of short selling. Just to be clear to anyone that's confused on that. So I don't think that there is an increase of short selling. It's not more frequent, as the statistics show, although the statistics are a little bit masked by internalization and synthetic transactions. But realistically, I think what is happening is the coverage of particularly these activist trades, because these are all the trades you're looking at here are all activist related trading activity. And I think that's certainly getting better coverage and more publicity. And I think the short sellers are getting better at publicizing their own research and findings and product theses or transaction theses.
I definitely can agree with that. And the thing as well is, like, I'm not sure if it is indeed more platforms and more capabilities of short sellers to advocate what they are doing, or maybe it's a change of their mindset that in previous years they thought, you know what, I'm not going to tell anybody what I'm doing because I think there's a gold mine I'm sitting on. I don't want anybody to tap into my margin or into my spreads, and maybe that has changed a bit, because I agree with you that the number of stocks and short sell trades that are openly discussed in different kind of platforms is a lot more than it used to be.
Yeah, actually, there's an idea for a blog post that I've just come up with. I'm busy writing that down before we get started. So so let's dig in. Where do you want to start?
I think we already briefly discussed the first one that we did, which was Wirecard, and actually, while we're recording this podcast, the first look back on stocks that I've blogged about is going to go live around that same time. So we wrote a story about Wirecard and what was going on, and we had people on a different kind of podcasts with us as well to talk about their findings in Wirecard. And at that particular time, when we wrote the blog, it was yes, as I said, it was unsure whether or not it was a fraud. What went on particularly, there was some talk about money missing in accounts, and especially in the Far East, that something dodgy was going on. But the BaFin and even the German Ministry of Finance actually had fully had their hands above Wirecard, saying no, everything is fine. But yeah, it turned out that it was not the case.
Yeah, it's amazing that we're only just over 2 years ago when German authorities were bringing lawsuits or threatening lawsuits against the short sellers. So from 2 years ago, where not only were they dismissing it, but they were actually proactively campaigning against short sellers to effectively a zero price. Not quite. It never really goes quite to. But what a turnaround of events!
Yes, it's amazing, and of course there's definitely some how should I say this, more sinister story about that. The person in Asia running Wirecard, of course, was found dead in Manila. All in all, it almost sounds like a Netflix series that's going to be brought out, and most likely that's going to be the case. It's definitely a stirring story.
Yeah, and just to put this in perspective, right? So the reality is, whenever there's this kind of a fraud uncovered, there is often a mix of um, illegality, questionable activity, certainly questionable judgment, and often, sadly, tragedy as well. So it is, as you say, everything that you would find in a Hollywood script, except for the happy ending, really. Unless the happy ending is that they weren't given an opportunity to continue to defraud people.
Yeah, but let's be honest, the money is gone. So yeah, it's definitely not a happy story for all those shareholders in Wirecard.
And as you say, we were fortunate to have Fraser Paring, who heads up Viceroy, on our podcast. That still remains one of our most popular episodes ever, unsurprisingly. Unfortunately, it was a little bit of great timing and terrible timing, because at the end of the podcast, he was trailing an upcoming announcement for the following week. So he wasn't able to reveal anything to our listeners, but he had another transaction up his sleeve. I don't know if you want to talk about that one now or go on to a different stock, but it's up to you.
Actually, we can briefly discuss because Grenke. It's also a German name where Viceroy alleged that a large chunk of their cash actually did not exist. So we looked into that name. We took the securities lending data, and what we always do is we look at the utilization levels, and we look at the fees that are borrowers willing to pay. And yes, right around that time there was a huge spike in utilization, and also a huge spike in fees, which may we go hand in hand, which is not that surprising. And of course, there was a huge drop in share price in Grenke. However, after that initial fluctuation, everything on the stock price remained rather stable. And actually, the utilization levels and the securities lending fees are actually dropping off. So, yes, it's one of those things. Is like, is it too close to call, or too soon to call, or is it something that's still out there and still going to be happening? But for now, I would say the indicators are that it's going to be a storm in a glass of water, and nothing's really going to come out of it. But hey, you never know what's going to happen in the future.
Yeah, I think there's still quite a lot of allegations and counter allegations and fighting, but the stock price, I guess, went from €55 to around 37, where it is now. So I think I was seeing in the breakout point quarterly review of performance on shorts that it was in the top 10 performers for campaigns that were launched in the third quarter. So it was quite successful then. But as you say, it's kind of plateaued. Although interestingly, Grenke got removed from the MDAX last week or recently, so it's no longer part of that index.
Yeah, you would usually expect some price fluctuations around those events as well. But yeah. It's one of the things. Like as I said, we quite often end the blog with watch this space, and it's one of those, I think.
Yeah, I have a feeling that this is one that we are going to want to keep an eye on and see how it plays out. So Germany's had a tough year. Actually, again, an interesting chart from Grenke was looking at the performance by country of where short selling campaigns of activists had been launched and how it had performed. And actually, Germany was on kind of the bottom end, and therefore good for short sellers, bad for the stock prices. And Chinese companies, on the other hand, were very much at the top, and they had actually improved their prices since some of the short selling campaigns had started.
Yeah. Well, funny enough that you should mention, of course. Well, if you have Wirecard, which was Q2, Q3, that was already like I think it was like €100 drop of a DAX name, which that immediately hits into those numbers, obviously.
Yeah, absolutely. Look, while we're talking about China, shall we talk about GSX?
The online training courses provider. I think GSX we can take it a bit wider, because GSX we looked at GSX because the Wall Street Journal came out saying the worst short of 2020. Well, okay, fine. Let's look at the data and see again if this is the worst short. And yes, it went up and up and up and up for quite a long time. But again, there are stories that the projections that the company is making are false, that the number of actual clients and subscriptions that they have is exaggerated. So all in all, we had a look at it. But what we did as well, because with Chinese companies listed on the New York Stock Exchange, there is definitely some muddy things going on, because quite often it is very difficult for foreign regulators or foreign investors to look at the actual true numbers of a Chinese company. And it's not the first one that went either bankrupt or had to pull their listing from the New York Stock Exchange. So we looked at it from different angles, and there's definitely from the beginning of the year there was definitely I should say it was definitely not a good short to have on the book, GSX. But when the year progresses, and especially Q3, there was more and more revenue to be made. So there is things going on with GSX, and I'm not sure if it's the latest has been said about it, and I'm sure it's not going to be. But there's definitely things going on. So if I look back at the GSX share price, which we took from beginning of 2019 when it IPO'd, it went on and on and on, and even did a peak of $131 around beginning of August. But then the volatility kicked in, and around the beginning of October, the share price dropped back to around the 70 mark. So it was a bad short to have on the book up until the mid of August. But after that, it's probably generating money now.
Yeah, and I think in the wider context of Chinese stocks, as you say, they're ones that people have been watching for some time. And if you look at if someone like Carson Block, who's been involved with GSX, his latest is now another Chinese stock, which is Joy. And again, I think that's a great example of a number of things. One of which is the greater marketing of the short position. So now you can even see a video of Carson Block or Muddy Waters allegations about a lot of the revenue being either circular or entirely fake, where some of the participants in it actually recycling their money within the group and not actually being paid out. So
It's funny because especially the White House administration also had a look at it to see whether or not they want to ban these companies from listing on the U.S. exchanges, or unless they adhere to U.S. accounting rules. Of course, it all depends now what's going to happen with the administration. Trump was, of course, very protective of their from their internal markets. Not sure how Mr. Biden is going to do with his view on this, but the bottom line is if too many U.S. investors are losing out on money on these companies, then they will probably they will kill it.
Okay, so that's we've now covered off Wirecard and Grenke and GSX, some of our recent ones.
You want to go back to Germany again? That was a second.
Why not?
Why not?
Why not?
And the funny thing is that, well, we've both been in the industry for quite some time, and there are certain names that always you remember what happened and how much money you were making on it. And one of the deals, actually, there were two deals that were very significant from a revenue perspective. But one was the ultimate, or the mother of short squeezes of all times, was the Volkswagen Porsche deal, whereby
Actually, before you do that, can you first explain what a short squeeze is for anyone that doesn't know?
So a short squeeze is where short sellers are starting to buy back their short inventory. So they want to close their position. However, if they do that and there's not a lot of liquidity in the market and there are a lot of short sellers, of course, then all of a sudden there are more buyers than there are sellers, which will increase the stock price. And as a result, more short sellers want to close their position because all of a sudden they start to lose money more and more and more. So the trend is against them. And in the case of Volkswagen, there were not enough shares Volkswagen out there to actually close off all the shorts. So that's when the stock price went through the roof. And at one particular time was, I think, the second largest company by share value in the world. So that's a bit of the story about Volkswagen and Porsche and what the short squeeze was.
So a lot of hedge funds were betting against Volkswagen. Then a surprise announcement by Porsche and Volkswagen about the potential for Porsche to take it over, right? And I think a hidden or an undisclosed derivative arrangement between the two changed the view for hedge funds who said, "Wow, this isn't really going to be a short that can pay off now. I better cover my position." Some people started, and then, as you said, as some started covering it, share price goes up. That meant some others started covering their losses, and then others were forced to cover their losses by their prime brokers, and it just became accelerating and sort of a self-reinforcing cycle.
Yes, it was quite a common play. It was a preferred versus common shares play, which is not that unfamiliar in Germany. SAP, not S&P, SAP. Previous did similar kind of conversion where the arbitrage was there and a lot of people benefited from it. They thought there was a similar kind of transaction going on with Volkswagen, the preferred versus the common. Only they did not know that Porsche had a 26 or 27% stake in a derivative position, which meant that they did not have to disclose those positions. But it also meant that the free float of shares Volkswagen was close to 5%. And then taken into account that Volkswagen was also a DAX name, so a lot of the trackers and a lot of the the institutional investors were already buy and hold in those names as well. So the actual free float was less than 1%. And I think there's around 12 to 13% that had to be covered in a short position.
Yes. So what you're saying is that because of the degree of passive holders of it, those shares, although theoretically they're part of the free float, they're not really tradable because they have to be held irrespective of the price. And it was interesting because I guess for the following sort of 5 or 6 years, there were a number of lawsuits raised by hedge funds saying that this sort of transaction wouldn't have been permitted in any other jurisdiction because of the lack of disclosure, and therefore they were unfairly treated, and in the end dismissed by German courts.
Yeah, but of course the story didn't have a happy ending for Porsche because originally Porsche was in a position to take over Volkswagen, and the end of the story was that Volkswagen had to bail out Porsche and buy Porsche because Porsche was almost bankrupt.
There you go. So that's and that's certainly one of the biggest news stories. Generated quite a lot of fees, but it was pretty meteoric. It was pretty meteoric.
It depends on
Volkswagen.
what do you call meteoric, but there are definitely some names out there that generated much more. Yes.
And I guess Volkswagen had been a general collateral or a low fee name because it was part of the index, right? So that's what made it accessible for hedge funds to take big positions. And in retrospect, you can see how all the pieces fit together to create kind of a perfect storm.
Yes, indeed, it was indeed a perfect storm.
So, Jeroen, that's Volkswagen. That's one of the two big transactions that we talked about. What's the other one?
The other big one that we blogged about was the Citigroup deal, and in order to have a bit of an oversight of what happened, we have to go back to 2009. And we just had the great financial. We're in the midst of the great financial crisis, and Citigroup received around 45 billion in loans from the U.S. government, and also had some large chunk of risky investments still on their book, and they needed to upgrade their TCE, which is their tangible common equity. Quite often, if you look at companies, you look at the Tier 1 ratio and you look at the TCE to see how healthy they are, and they wanted to increase their TCE. At that particular time, they said that they were going to exchange their common stock, and so they were offered to exchange the common stock for preferred securities. And at that particular time, there was an arbitrage between the two, and we were talking about the perfect storm with Volkswagen. There was a bit of a perfect storm as well with Citigroup because the spread or the arbitrage was so big, and the issue was also so big, and there were so many shares available of Citigroup because all major investors had stocks of Citigroup, and they were available to be lent in programs. So all in all, that I would say that not so perfect storm, but that environment led to I think is the biggest revenue generator in one particular name in securities lending, and the numbers are not 100% sure, but they will actually exceed 1 billion US dollars. So overall, all the lenders that were lending out their stocks of Citigroup generated $1 billion in fees on that particular name, on that particular deal.
Yeah, I used to describe that year as when I was doing sort of training or when I would speak at a conference, I'd talk about, well, that was the year where the fees for the marketplace to agent lenders and beneficial owners was $8 billion of all stocks plus $1 billion by Citibank. So that gives you an idea. If you think of the thousands of securities that will be loaned out over the course of the year, which created $8 billion of fees, and $1 billion of fees was created by one single stock in over the course of, I think, probably from February to September. So it wasn't even a full year.
No, it was really really quick, and actually it spiked around June, and at that particular time, levels were, I think, 30,000 times the level which is normal common GC. So it was a huge increase in fees, and yeah, as a result, the numbers were yeah, extraordinary. I think I have some graph on the blog that we posted, and um, so in April and May, you're right. So the overall fees were between the $100,000 to $200,000. So that's per month. But then in June it skyrocketed to almost 400,000. So, and then July and August it died down a bit. But all in all combined, I would say in 4 months, 5 months, $1 billion dollar was generated.
Yeah, and it's difficult for people to recall what the market conditions were at the time. And of course, many people listening to this perhaps weren't even in the market, a dozen years ago. And what you had was you had in the summer of 2007, the financial crisis actually started with real questions about liquidity in the markets after so the housing crisis and the subprime issue really kicked everything off, and that tightened liquidity from really August 2007, when lots of people got called back from holiday to say you need to get back into the office. And of course, the equity market was still rising at that time. It peaked later that year, and through 2008, you had markets falling pretty dramatically. And during this period, banks were getting some support. We saw in the UK the first of the nationalizations of Northern Rock. So market conditions changing. Lehman Brothers goes out of business. Banks in the U.S. some of them were forced to take federal funding. Some of them were welcoming it, but in any case, companies weren't able to issue dividends on their common stocks. Citibank came up with the idea of a preferred issue, where at least the coupon would have priority over a common share dividend. So you all of a sudden attracted new capital into that, and giving investors not only the fixed coupon, but the potential to say, look, if the markets recover and Citibank shares come back, you can convert these preferreds into the equities, and you have a potential upside on that. Of course, when you get that, you've got assets that are, and the typical arbitrage is two assets that are effectively equivalent. A convertible preferred, convertible into common, is the same as a common depending on the price. And that's what created the arbitrage transaction. So, and I think when it was launched, they didn't announce what the conversion ratio would be, and that's what created those conditions. So, really, a unique set of circumstances of the time.
Yeah, and you said unique because I can't think of any other stock that had a similar kind of revenue. Actually, that's might be a good idea. We'll have a look what the top three of 2020 was in relation to revenue, income, and write a blog about that.
Yeah, it's been interesting. There was some data recently that I saw for the third quarter results from markets. And one of the key differences between 2019 and 2020 is that you don't see the cannabis stocks as being the huge revenue generators that they were last year. So it'll be interesting to take a look at that. So there's one other one which you covered, which was Carillion. And when we were talking about this, it's kind of just another trade in many ways, right? It's just another short position that people made money on, right?
Yeah, and the thing is with Carillion is that of course it happened what was it 2017 I think it was, or 2018 when 2017 I think writing was a bit about it, so the writing was already on the wall, and they went into administration in 2018, and the reason why we looked at it because it was the single largest liquidation in the UK, and it had a massive fallout. Not only on the stock exchange, but also on a much more personal level. A lot of layoffs, a lot of um, circumstantial influence that was out there. So it had a big impact. I would say mainly in the UK, but also in Canada, where Carillion had a quite a large outset. Um, yeah, so we had a look at it, and when we look back at from 2015, we had a look at the utilization, and already in 2005 2006 the stock was quite highly utilized. It was more than 60-70%, which at any given time when it goes above 40-50%, something is wrong. Oh, sorry, not wrong, something's going on, let's put it this way. And there is interest from short sellers in the particular name. However, that came down again in 2016, and actually went back to bit to less than 20%. Um, Again, to be followed to in 2017-18 with a huge spike again, and that's also when the lending fee almost exploded. 2015, 2016, things were rather stable. However, in the midst of 2017, um, it skyrocketed, and shortly thereafter, the name defaulted.
Yeah, as you say, if I can use this phrase, ironically, the closure of the company created quite a lot of collateral damage. um,
Yeah.
but look, I have a personal story here. There was someone. Carillion for me will always be a watershed because I think it's probably the only time that in my career that I've convinced someone of the value of short sellers that was very much anti-short sellers, and they realized with Carillion that in fact short selling activity could be an indicator of problems at the companies, and rather than dismiss short sellers as evil capitalists, that they should maybe take a look at the activity and consider that against their investments and re-examine the potential risk if the short sellers are right. So it kind of changed their thinking, and I'd like to think that they now have a more informed view, and they might miss the next Carillion. So it will always hold a special spot for me in that case. Um, right. What about there's one that's still really in play now. Again, another one that was a top Q3 pick for breakout point, and that's Nikola.
Yeah, Nikola was, of course, again one of those names that was very highly publicized in the news. There were potentially, well, things not going the way they should be. There was a video that was fabricated potentially. There was a presentation where one of the trucks had like a cable running onto them to provide electricity. All in all, lots of things going on, and the Hindenburg research issued a paper, and they came up with all kinds of things that were not quite as they're supposed to be. So we had a look at it from a securities lending perspective. And you're right. There were definitely some interests in Nikolai, and also increased fees. So is one of those names that you will think, okay, fine. Is it a fraud, or isn't it a fraud, or is it mismanagement, or is there something else going on? And the indicators were that something was definitely not going right, and we delved into it a bit more deeper since since their IPO, and what one big good thing to talk about is an IPO as well from a securities lending perspective. So we'll do a bit of a sidestep, because when a stock IPO, so the initial public offering, the levels from securities lending are immediately quite high, because investors will try to see whether or not the stock is oversold, or the share price at the IPO is potentially inflated. So they're trying to benefit that from that, and they want to short the stock. However, when you IPO, the actual stocks to borrow are not there yet. So the systems still need to be updated. People did not know how much they've allocated in the IPO. The custodian and potentially the agency lending, or the agent lending desk, or the securities lending desk needs to update everything that before everything flows in. So especially at the beginning of the IPO, there is very limited stock available to short, so that will also make the fee higher, of course, because there's not a lot of inventory, there's a lot of demand. One together makes that the IPO fees, so the fees of securities lending after IPO, are quite substantial. So we immediately saw that. However, after that, the actual utilization and the fee, dropped down. They were quite stable again. Of course, the share price after the initial IPO also came down a bit, but all in all, not so much of a story for Nikola. When we posted it, of course, just after we posted it, it was announced that the CEO of Nikola would step down, that General Motors, who was going to take in a $2 billion stake in Nikola, actually took a few steps back and said, "No, for now we're only going to partner up on the fuel cells." And so, where there's smoke, there's a fire. So one of those things that we're going to have to watch out for what's going on there.
Yeah, and again, just to recap what actually happened with the price. So the day that GM announced, or that there was an announcement that GM was considering taking an ownership position in it, the price peaked at 50. Then, as you said, the various research pieces came out, or the allegations about the questionable video you referred to, and that triggered everything. I think the investigation is still ongoing. As you say, the CEO has been replaced, and to me, that's kind of the right thing. If there's a valid company activity going on, as opposed to Wirecard, which has been shown to be a complete fraud, and Grenke, where this is in question, that's the challenge. How much is it a problem versus a fraud, an outright fraud? So with Nikola, you say, well, look, here's a company. There was some questionable activity. The CEO does the honorable thing and leaves. There's investigations going on. GM has stepped away, but they're still continuing, I think, to want to be the providers of the hydrogen fuel cells. So they're continuing that arrangement. Stock price went from 50 with the GM announcement to last night closing under $19. So we'll see where that one goes.
Well, and then the funny thing is with the current securities lending data is that we see a bit of I would say a strange situation. Normally, when stocks get interest, what happens first is that the utilization levels will creep up and will go, say, above 80-90%. And right after that, securities lending fee will follow, and that of course depends on supply and demand. But of course, if there's not a lot of supply, that can go way high. With the Nikola case, actually, it is a bit of a strange one, because the utilization levels have been going up and up and up and up, and are actually quite close to the 100%. However, the fees have been dropping, and have now bottom out a bit or plateaued a bit around the say the 20%, which of course is still sorry, not 20%, around the 5%, which is still quite, it's still a hefty percentage. However, it's not where it was with the 35-40% previously. So one of the things that if the utilization levels remain high, I don't see that securities lending fee remaining where it is, because at a certain stage there will be an increase.
Yeah, again, I think one to watch, to quote you from your blog post. So we're actually recording this on Friday, the 11th of December. So by the time this goes out, you will have posted the 10th in the series. So we'll watch for that one.
Yeah, the 10th. Sorry, the 10th in the series is going to be the first look back when we said so many times in those posts, one to watch. So here it is. Watch this.
The other thing you mentioned, which we hadn't planned, which I'll just touch on briefly. First, I'll say the links to all the blog posts that we talk about will be in the show notes to this episode. But the final point is, I commented on LinkedIn today about DoorDash, which is a US IPO. Again, it came out on Wednesday. It's up 86% on the launch price, and someone had posted on LinkedIn about just that the point that on launch date, the shares aren't in the lender's accounts, so they aren't shown as supply yet, and it takes a couple of days for that to settle down. And you talked about some of the other impacts of the IPO. The other thing I'd say is, of course, with many of these issues, there's a large insiders lockup period as well, which means that the free float is even diminished more by those. And so when those lockups expire, you see kind of a leveling out of fees if they're still inflated. But any stock that starts with 86% rise is, in my view, likely to go in a different direction fairly shortly. But we'll
or the issuing bank had their due diligence wrong and the share price wrong, but I don't think that happens often.
No, and they raised the target price, I think, last week as well. So look, and the other comment that I made was picking up on an FT story commentary on it, where one of the early investors in DoorDash said that that the reason DoorDash is popular is because they have burned through money at a slower pace than Uber Eats, and therefore proved that their model's better. And I thought, how ironic that it's like, oh well, we've lost less money than the competition, therefore we're better. But to be clear, DoorDash did have a surprise profit in Q2 of $23 million. So that does make it different. I mean, there's one that actually, while we've been talking about that, I think maybe might be worth revisiting, because people might not remember what happened with Facebook, and I think that was a really interesting IPO, because the other thing that happened there was positions by the investment banks that brought it to market to hedge their own potential exposure. So maybe there's one for you to look into in future.
Yeah, I'll take it up indeed. Yeah, good point. Good.
Great. So listen, I think anything else you want to add? Otherwise, I'm going to put you on the spot.
Well, before you do that,
go ahead.
For the listeners out there, if you have any name that you want us or myself to write about or to investigate, retrospectively or maybe going forward, if you think, well, hey, this is an interesting name, drop us a line, DM me, and we'll see if there's a story out there. So now you can put me on the spot.
That's a great idea. Of all the stories that you looked at, which one did you find personally the most interesting, and why did you find that story interesting?
Good question. I think I have to name two, because retrospectively, looking into all these names, the Citigroup one it hit a personal note with me as well, because I was dealing at that time. I was in the middle of that of that name, and we saw the daily accrue go through the roof on that particular name. And to be honest, personally, I wasn't too bad by the end of the year either. So retrospectively, it has to be Citigroup. With
Just
the
on
name,
that one,
yeah.
at the time, were you a borrower or a lender at
Sorry.
that time?
At that time, I was a lender. I was responsible. So at that time, previous to that, I was responsible for the securities lending desk at in Holland for my previous company, and we just closed the books and we handed everything over to London now, and I was going to move to London. Lehman collapsed, and I was on a beach somewhere in Portugal, so that was a good thing. The next thing, of course, what happened is that I went to London, and then I was responsible for the trading there, and that's when we saw the revenue generator, and I think. A lot of our sales guys as well had a very friendly talk with their clients to explain what was going on, and they were quite happy with the additional income I would say in their overall difficult year. Going back to your question, which one struck me the most? I think it has to be the Wirecard one. There were so many things going on that level, and the stand of the BaFin and of Germany, and threatening with lawsuits, and in the end, the truth prevailed, and I think that's why I think it's a happy story, despite some of the sinister part of it.
Great. Well, look, I think that makes sense to me, and for me, of all the stories that I've read, I think that's also a particularly interesting one. Jeroen, thank you very much. I really appreciate you taking us through that, and also just covering the stories in the first place. I look forward to more of those. And for our listeners, I'll be back in a couple of minutes with my wrap up and thoughts. So thanks again, Jeroen, I look forward to the next one.
Thanks for having me, Roy.
Bye. Thanks.
Me too.
Bye.
Thank you.
Now, before I get started with my wrap up for this year's review on the blog post, I'd like to say a few thank yous. First of all of my guests and partners who've given up their time to record these podcasts, and for some of them, even actually re record them when I've made a technical blunder. So apologies for that, but thanks for your time. But look, I think that I've learned a lot. There's been some great insights, I think, that people have given us and shared with us. So I hope you appreciate that as much as I do. I'd also like to say a big thank you to my producer, Raymond Blockland, who works tirelessly behind the scenes to make these as high quality as they can be for your listening pleasure. Fixing, again, some more of my my foibles and trying to level out the sound, which is a challenge in these home recorded events week in and week out. I'd also like to thank my daughter, who started doing the podcast images for me a little while ago. So the quality's gone up and the time it's taken me to do them has gone down. So thanks very much, Jessica. Most of all, I'd like to thank all of you who've listened to the podcast. I hope you get value from them. As I said, I learn something every week, so I hope you do as well, and you find them entertaining from time to time as well. I really appreciate the time that you give to us. Now, I hope you enjoyed Jeroen's review of important securities lending trades, past and present. If you did, and you haven't already done this, please subscribe and tell your friends. And if you're really feeling the festive season vibe, why not give the podcast a rating and review and consider it a Christmas gift for me and the team? We'd really appreciate that. So let's get to the wrap up. Jeroen started off by sharing with us that he wasn't really all that certain that he could even write a blog post when he joined PurePoint. If you've read his posts, I think you'll agree with me that he writes very well. And based on the feedback I've received, a lot of people have found real value in his explanations. and the key aspects of each trade that he brings out. Rather than do it a repeat of what you've just heard, I think that instead I'd like to invite you to send us your request for trades, be they stocks or bonds or trading strategies, trades that you'd like us to look at. Well, when I say us, I really mean Jeroen. Although we really do all look at them and give our feedback, thoughts, and input to that. But look, our contact details will be in the show notes. As I said, this is the last podcast for the year. Again, we've had some really exciting guests lined up this year, and we have more coming in the new year. It's a continuing mix, so we tried to bring in securities finance people, but also people from related areas that kind of fill out that kind of wider perspective on the activity that results in securities lending and influences it. The people we have lined up, it's that continuing mix of securities finance activity with special guests that join us to give us their unique insights. As I mentioned, we provide a lot of securities finance content, which you can find at our website, www.peerpoint.info. We're active on LinkedIn and Facebook as Peerpoint Financial Consulting, and on Twitter and Instagram as Peerpoint FC. I'm Roy Zimmerhansl. This has been Peerpoint Perspectives, the art of securities finance. Thanks for listening, and ho, ho, ho.